Hey guys, I'm Corey and this is Tiffany.
And we're the co-founders of Investor Life.
And we help investors scale their portfolio using other people's money.
So in today's video, we're talking about one of the biggest questions that we get. We get it every single time we speak from stage. We get it emailed to us. It's the biggest question that we get. Should I incorporate or should I be purchasing real estate investments personally?
So there are many different ways you can do this, and there's so many different answers to this question. The thing about it is it really depends on your own personal situation.
That's like the most annoying answer in the whole wide world, right? It's an answer that's not an answer. However, that is the answer. It is dependent on you, but we have a few tips and a few cautions to give you and a few things that we've learned along the way in watching others as well as our own portfolios that we'll be able to help you out with.
So one of the first places to start is with your mortgage broker. Now, to buy real estate, you need to be able to qualify for mortgages, right? You need to be able to get a mortgage on your property. So in talking with your bank or in talking with your mortgage broker, you need to find out whether it's going to help you or hinder you, whether you are qualifying with a corporation or whether you're qualifying personally. So that's one of the first places to get started.
So what we see happen a lot is investors will go out and they'll be like, well, I want to limit my taxes and I want to limit my liability. And so they'll incorporate a company, which is expensive to do and then expensive to keep up. And then they'll go to a lender or to a bank and find out, oh, sorry, we'll only lend to you personally. So they end up putting it in their personal names anyway. So the first thing you want to do is check with a mortgage broker and find out whether or not you'll be able to qualify within a corporation. That's your first step.
There are lots of other costs to keep in mind too, like your accounting fees on a yearly basis are going to be significantly higher if you're buying properties in a corporation. So one of the questions that we always ask is, how many properties do you plan on buying in this particular corporation? How many properties do you plan on buying, period? If you plan on buying one property, is it worth it to pay $3,000 a year in bookkeeping and accounting fees? What is that going to do to your cash flow on that one property?
And that's never mind then the registration fees and keeping up your corporate, papers and all that kind of stuff. So there's a lot of fees, so it is a big decision. However, and again, the second thing you have to do, the second person you have to talk to is your accountant. So your accountant is going to look at your personal situation and determine what the best answer is for you. But in general, there's an asset threshold. So until you hit that number in assets, for the majority of us Canadians, it is not worth it for us to incorporate until we get to that point. Now, depending on the market that you're in, that might take one property, that might take 2 or 3 properties. So that's why you really need to first check with your mortgage broker on financing, but secondly, check with your accountant. At what point should you incorporate? That's the second person you need to talk to. So a lot of people will argue with us a little bit and say, yeah, but what about liability? Couldn't a tenant or someone sue me? And if I'm personally holding these properties, they could come after everything that I own. So absolutely, that's a legit concern. So one thing to look into too, third person to talk to is your insurance broker. So commercial liability insurance policies will cost you between $600 and $700 a year. And that will protect you from all of that kind of stuff versus, $3,000 to $4,000 if you had a corporation for that same reason. So that's one, kind of workaround. So third person you want to talk to is your insurance broker. Second thing we hear about all the time is, yeah, but what about taxes? And what about the, benefits of being in a corporation and having corporate limits versus personal limits? Legit concern. Again, there's all kinds of things you can do. And we're not going to get into it today, but for example, trust agreements. Ask your accountant about a trust agreement. That often can be a workaround instead of incorporating, and again, much cheaper to do and to maintain.
So what's the point? The point is if you're wondering whether you should incorporate or not, there's 3 people you want to talk to. Number 1, talk to your mortgage broker. You're going to need mortgages to be able to qualify, or you have to be able to qualify for mortgages in order to buy real estate. So figure that out first. Number 2, talk to your real estate focused accountant, an accountant that deals with real estate investors. They're going to understand this better than your typical accountant. Number 3, you want to talk to your insurance agent and see how you can be protected whether you're incorporated or not.
So if you found this video helpful, please subscribe to our channel. Also check out any additional videos that we have in the description in the links below. And thanks for watching. We'll see you on the next video.